Let's get across the market open now. Jimmy Jane joining us from GBA Capital. Jimmy, welcome to Friday. Good to have you back on the show. Well, let's start on Wall Street. Obviously, markets still digesting those moves from the Fed Reserve.
Morning, Andrew. I think the big one, we obviously saw the Fed cutting the rate by 25 base point. What kind of largely well expected. What kind of stood out was the shift in tone. So back in July, the focus was inflation. This time it was more kind of clear that weakening labor market conditions drove the decision. So what was also interesting is that the futures market are still kind of well divided on how many cuts we'll see in 2025 leading to 26. So the path forward is, anything but certain at the moment. Another interesting point that we saw was the Fed governor, newly appointed Mr. Moran, push for 50 base point. Obviously, the Fed is trying to balance two risks here. Obviously, one is cooling labor market versus the persistent inflation. So a larger cut could have sent the wrong signal that the inflation risk were being ignored, especially since those core PCE forecasts were, actually revised higher. And obviously, on the topic of inflation, it was all kind of, raising a lot of alarms here, Andrew. Could the Fed actually reignite the inflation by cutting when especially the market's all-time high at the moment, all, across the whole index? And that's a real concern that we're seeing as well. And, when you cut rates while inflation is still kind of well elevated, the risk is obviously fueling another wave of price pressures. And the Fed itself kind of lifted its 24 core PCE forecast to 2.6%. And that's why investors are increasingly hedging their inflation-sensitive assets like commodities, oil, uranium, and rare earth all have seen the renewed interest as well.
Now, interesting moves also on Wall Street in regards to Intel. That's the biggest move in around 40 years for this stock, with Nvidia taking a stake in the company.
Yeah, really, really kind of bold move made by Nvidia. They agreed to buy Intel shares at 23.28 cents each, which is a very surprise premium over those previous government-linked investments. So in total, it's about $5 billion move. The deal's about to, it's not really about investments in Intel by Nvidia. It's actually more about teaming up for the future of computing. And, Intel has been under a lot of pressure, lagging TSMC, Samsung, and those kind of missing the AI chip boom. So, partnering with Nvidia, obviously could give it much needed momentum. But, the market loves the idea, and so do we as well, Andrew. But the next few quarters will be critical for Intel to prove they can actually execute these, teaming. And it is very important because if we don't see that come through in the data in the next 2 quarters, the investors will get disappointed, and that might actually hurt the company even more from this rescue.
Well, let's focus what we're seeing locally. Now, of course, anticipation of what the RBA is going to be doing next, bets that it is going to stay put on the next meeting.
Yeah, broadly, the expectation is that we're going to see RBA, holding the rate. Inflation here is, locally is definitely easing, but it's not, as convincing as what we're seeing in the US. And then the wage growth is also remains quite sticky as well. So the Fed's cut gives the RBA some breathing room, but we don't expect them to move just yet, and they'll kind of want more data before committing for that kind of a rate cut. And that could kind of signal a lot of momentum in the local. Like we all know the rate cut's coming, we just don't know exactly when. We're obviously expecting about one or two rate cuts by end of this year, so one in November potentially. So the market will start to price that in, and it's going to be very interesting to see both inflation being quite elevated from where we are, and markets being all-time high, and knowing that the interest rate cuts coming ahead, we might see a very interesting market for the next 2 months.
Indeed. Now, speaking of interest, the Santos move, or be it non-move, yesterday, of course, that takeover deal is off. Where to now for Santos, do you think?
It's a classic. Whenever we see a takeover kind of news flow coming on, or however big or small the company is, the investors really need to watch this out. Just like what we saw with Origin, a long time ago, and also now same thing with Santos. This could have been the largest ever cash takeover with $8.04 a share. But XRG pulled out just because just before the extended due diligence deadline. And this is now the third failed takeover attempt in 7 years by the company. So event-driven investors in Santos will likely unwind their positions, as we have seen yesterday, and that's a key short-term risk for the company. But on the positive side, Andrew, I think Santos has real-term, long-term catalysts like Barossa LNG startup by month end and progress at the Peacock projects in Alaska. So I think the management will start to shift focus to asset sale to fund growth, right, and also creating those huge value for the shareholders as being sticky in this situation.
Now, so that stock's taken a tumble. Look, another stock that has come under extreme pressure, particularly in the wake of earnings, has been James Hardie. What are you looking at there?
Yeah, it's one of the stocks that we really do want to potentially get back on, but it's just not looking as positive as we have seen over the last 12 months. So the U.S. housing data came out and it started to kind of fell sharply in August. Single family construction hit a 12-month low, so that's already tough for James Hardie. It's already going through such a big drop in their margins and their growth, and also their new exposure to the residential construction as well. But what we can see here is a big opportunity because with the Fed now in a cutting mode and the housing demand still kind of structurally strong, we kind of see this as a potential midterm opportunity. It's a cycle dip rather than a structural decline. So I think for all the investors out there that's been kind of eyeing on James Hardie, it might be a good time to maybe start dipping our toes into this stock because I think it kind of fell back to the level where it is now in a strong support. And most importantly, valuation is still very well undervalued with these rate cut potentially seeing in the US. So yeah, definitely good one to put on the watch list.
And just finally, Jimmy, I see you've got your eyes on a local stock, Australian fintech, Stack. So this was formerly Doe, and look, it rocketed yesterday. What's going on?
Yeah, and we always love these small cap companies having a beautiful day, with what's happening in the broader market. So, Robinhood, which is one of the largest, cryptocurrency platforms in the US, will use Stack's embedded finance solutions. So things like image capture, authentication, and transaction processing. So, other than the name itself, where Stack is partnering up with one of the largest cryptocurrency platform, the catch is the revenue that will depend heavily on the success of Robinhood's new banking offering. So it's still quite uncertain, but it kind of does give Stack exposure to a global name, and it could be a big growth driver if the rollout obviously succeeds. And the market cap is still very low for this type of business. So definitely a good one to add to the watch list again and kind of monitor it. And if we see a bit of a drop today or the next trading session, it might be a good one to just add.